Hey traders, welcome back to the channel. In today's video, we are diving into the basics of technical analysis, the foundation of successful intraday trading. If you're new here, don't forget to hit subscribe and let's get started. Before we start, a quick reality check. Look, if someone tells you, put your money here, and overnight you'll make a fortune, don't believe it blindly. In the world of trading, there are no magic tips, no guaranteed profits, and absolutely no shortcuts. Be cautious of random WhatsApp or Telegram group stock market gurus claiming 100% success rate, paid tip services promising huge intraday gains, and psychological traps like FOMO, fear of missing out. These are often traps to lure beginners. And many people lose their hard-earned money falling into them. Always remember, if it sounds too good to be true, it probably is. Trading is a skill, not a gamble. Focus on learning, not just earning in the beginning. And always trust the charts, not the noise. Without any delay, let's dive into today's topic, technical analysis. What is technical analysis? Technical analysis is the study of reading price charts, to predict future movement. Traders usually read the chart to buy or sell. Unlike fundamental analysis, which looks at a company's financials, technical analysis focuses on price action, volume, and indicators. The goal? To predict future price movements and make smart, quick trades. Technical analysis is divided into two main categories. Number 1, price action. Number 2, indicators and technical tools. Let's break them down one by one. What is price action? Price action is the analysis of raw price movement on the chart. No indicators. No fancy tools. It is considered the foundation of technical analysis, and traders use it to identify trends, patterns, and potential trading opportunities based purely on price behavior. It's all about 1. Market structure, higher highs, lower lows, ranges. 2. Supply and demand zones, areas of potential reversals or strong reactions. 3. Support and resistance, key horizontal zones where price reacts. 4. Trend analysis, identifying bullish, bearish, or sideways trends. 5. Multi-time frame analysis, aligning trades across different time frames. 6. Breakouts and breakdowns, when price moves strongly beyond key levels. 7. Pullbacks or reversals, distinguishing a correction from a trend change. 8. Gap up and gap down, sudden price jumps or drops between sessions. 9. Stop loss placement, protecting capital by managing trade exits. For example, a strong bullish engulfing candle on a support level might signal a potential buy. In our upcoming videos, we'll break down each of these price action elements one by one, so you can understand how to spot high probability setups with confidence. Types of price action patterns. Some common and powerful price action patterns include doji, hammer, shooting star, head and shoulders, double top, double bottom, triangles and flags. These patterns help traders predict whether price is likely to reverse or continue its trend, making them essential tools in every price action trader's playbook. What are indicators? Indicators are mathematical tools based on price, volume, or open interest. They help you confirm trends, generate entry and exit signals, and support your price action analysis. Popular indicators include moving averages, SMA and EMA, RSI, relative strength index, MACD, moving average convergence divergence, Bollinger Bands, VWAP, volume weighted average price, especially useful for intraday traders. What are technical tools? Technical tools help enhance your analysis and stay more organized on the chart. These include trend lines, to mark breakouts and support levels, Fibonacci retracement, to identify pullback zones, chart patterns, like wedges, channels, rectangles, volume profile, to see where the most trading activity occurred, drawing tools and alerts, to plan trades and automate your workflow. They don't generate signals but make your analysis more precise and structured. Don't clutter your screen. Use tools that help you stay clear, confident, and consistent. How to combine both? The best traders combine price action and indicators. Example, you might spot a bullish flag pattern and confirm the breakout using volume or RSI. This combination gives you stronger and more reliable trade setups. To wrap it up, technical analysis helps you read the market. Learn to trust the charts, they tell you everything. Master price action first, then add indicators as confirmation. A final reality check: just because you've learned technical analysis does not mean you're now a complete trader. Technical analysis is only about 20% of trading success. The remaining 80%? It comes from psychology, controlling emotions like fear and greed, discipline, sticking to your plan, risk management, protecting your capital, and having the patience to wait for the right setup. Many traders know the charts, but they lose money because they don't master their mindset. So if you want to succeed in intraday trading, work on both your skills and your psychology. And most importantly, don't fall for tips and hype. Trade with logic, not emotion. In the next video, we'll dive into a very important concept, market structure, and how it guides your trades. Don't forget to like, subscribe, and hit the bell icon so you never miss an update.